We're back with our weekly market review where we analyze the markets to see if a correction or crash is coming. Because that's our job at Fallible, right? Grow our money, but more importantly, protect our money through risk management. That's the key to real long-term success in the market. So first off in this video, we're going to go over oil because there are some huge things happening in that market. Then of course, we got to talk about this Bitcoin correction and what we might see from here on out. After that, we'll of course do our equity update to see what's going on in the stock market and where prices are headed from here. And with that, we got a number of stocks that we're looking at that are looking pretty good. So you don't want to miss that. And then finally, we're going to talk about the new rotation that we did in the Fallible system. So let's jump into it. And of course, as always, we'll be using our research from MacroOps, our global macro research and consulting firm. So oil, as you can see right here in this chart, has been on an absolute tear. Since November, it's up almost 80%. So there's a lot of action going on in this market. But even with this strong move, it looks like there is a pullback coming. Now, long term, we're bullish, but you'll see what we're talking about in the short term here. So Brent crude oil spread from its 200-day moving average is at its widest point since 1999. You can see right here, this green bar is hitting highs we haven't seen in years, decades. And this is just a gauge to tell how far away an asset is from its average. Because what do we know about markets? A lot of the times they mean revert. So even after they got a lot of steam and they're taking off, they will turn around to get back to that average, even if the long-term trend is up. Crude oil is also about to enter one of its weaker months from a seasonality perspective. So commodities go through natural ebbs and flows depending on the season. So you can see this yellow line right here, it's dipping, but that's natural. But it's also a little more skewed because of what happened in March of last year, as you very well know. But longer term, the supply and demand picture for oil continues to improve. This whole rally in oil prices is being driven by fundamentals. So you can see right here, inventories of oil, they're falling much faster than what analysts expected. And OPEC isn't exporting as much as expectations either. So the way you can look at this is that inventories are demand where the exports are supply. So you've got demand increasing and supply decreasing, and what's that going to do to the price? It's going to push that price up higher. So while this longer term bull trend is intact, we may see a pullback here, and that might be an opportunity to get into some oil names because they are all benefiting from this reopening economy. Speaking of, you can see the global vaccine rollout is picking up steam and it's driving the case count lower. So again, that bodes well for a very strong reopening. Next up, we got to talk about this correction in Bitcoin. What's going on? So you can see here that the Grayscale Bitcoin Trust, which is GBTC, basically like the ETF for Bitcoin, it's traded at a premium to its net asset value for its entire history until last week. You can see this red line right here, it dipped. So for the first time, it's selling below its net asset value. And that's basically a sign of souring investor enthusiasm for Bitcoin, which was confirmed by Centix's Bitcoin Sentiment Index. So we know Bitcoin dropped a bit, and in the current survey, there's clearly gloomy sentiment, which is already close to a lower turning point. So it looks like stabilization is approaching in Bitcoin prices. But there hasn't been a big reversal in investors' value perception. So we're looking for that before Bitcoin really turns around. So it does look like we may have a correction here, or at least sideways movement. We're not going to see the same type of movement we've seen previously. Does this mean that AK will finally be able to invest in Bitcoin? Maybe. I don't know. I still got to move around money. Hasn't happened yet. But hopefully we get a nice 50% correction so I could jump in at the bottom, because that's the dream of every investor in anything, right? And it never works out. But one thing I did want to talk about is those NFTs, those non-fungible tokens. And remember, I posted that this little crypto punk right here is going for almost $100,000. And of course, we're going to make fun of that because it does seem stupid. But here's the thing, we can make fun of these NFTs, but we still understand the purpose of blockchain and the authenticity behind having something that is absolutely yours. Indisputable because of the blockchain. Yes, there is value to that. But also, crypto punks, are they going to be around forever? Can you seriously tell me that they're not going to crash in value? They most likely are. There's going to be a lot of different NFTs, all these different little things that people are trying to collect. They're going to become worthless because that's how this game works, right? But yes, this is also the first technological stage so that we could use this blockchain for more important things. So it's all a process. I'm not hating on blockchain. I think it is the future. Decentralized finance is all very interesting stuff, which is why I was also interested in Ethereum, because this is kind of the cryptocurrency that has applications run on it. I'm not explaining it correctly right here. It's a little more complicated, but things like NFTs operate through something like Ethereum. So back in the day when I did invest a very little bit of money into cryptocurrencies, I put half in Bitcoin and half in Ethereum. So this round, I'll likely do the same thing. Instead of putting it all into Bitcoin, I'll put half into Ethereum because there are a lot of use cases for this kind of application on the blockchain thing. And maybe I'll make a video about that in the future. But definitely Ethereum is something to look at if you're looking at cryptocurrencies. Next up, let's jump into stocks. What is going on with the market? We've seen so much volatility recently. What does it mean? Well, you can see right here as I'm recording this video, we're getting a nice little pop in the stock market. And realistically, last week, week during that huge sell-off, you can see the breadth in the market right here, which is how many stocks are going up versus how many are going down. You can see it barely budged. It stayed really strong even with that big correction. So the reason we're talking about this is because we're looking at market internals. For a strong market to continue, you want a bunch of stocks moving together, not just a few bringing it up. So if you see breadth like this holding up, that's a really good sign. So then what was causing all these down moves? Well, that seems to go back to rates. You can see right here that treasuries drop like crazy. And what happens when the price of treasuries drop? Interest rates go up. And when interest rates go up, all the valuation models change. So all those analysts using their models to analyze these tech stocks, those models change because the input changed. Interest rates went up. So that caused valuations to go down, which is why especially in the tech sector where valuations are the highest, we saw this nice drop. But going back to rates, look what we're seeing right here, a recovery, meaning the price of treasuries are popping again, which if prices are going up, then interest rates will go down again. And that interest rates lower is good for the stock market. So seeing all that volatility in the market last week and that drop coupled with strong internals, that gives us the first signal that the longer term bull market isn't over, right? We should see markets continue heading higher. And when you add in the fact that rates might have put an intermediate top in, meaning we hit a high in rates and they should come down for the foreseeable future, at least for the intermediate future, that is also another good thing for the stock market. So it's looking bullish, at least over the longer term. Now, if we zoom back on the charts, the S&P 500 monthly, if we look at this monthly close right here, you could see that this top tail is longer than the body, and the body is right here. And this is just some technical reading, basically telling you how investors were acting, right, with their money. So this isn't the most short-term bullish sign, which raises the odds that we see continued sideways to downward chop in March. What's that mean? More volatility, more sideways action. You can say the same thing on the weekly close. We had a bearish candle, which means sideways to slightly lower chop this week, most likely. And going back to this monthly analysis, we love to do it at the end of the month, obviously, because we had a new bar print. And you know, the further you zoom out in the markets, the longer time frame that you look at them on, the less noise you're going to get, which is always good because there is so much noise in the stock market. Noise like CNBC that I got on in the background. I would never, ever watch CNBC. It's on mute right now. I literally only put it on for these videos to have something in the background. Noise. You always want to cut out that noise. Now, if we're still bullish on the market, of course, we want to look into some stocks, right? First up is semiconductors. They continue to be one of the strongest areas in the market, and Western Digital is no exception. You can see right here its monthly chart. It's forming this nice pattern that it's ready to break out of. It's completing that 6-year coiling wedge. And as you've probably heard, there is a chip shortage. They can't get enough chips for cars or for computers, just everyone, because everyone was staying home. They used them all up and our supply chains got disrupted. You get the idea. It's the reason I still can't get a PlayStation 5 and I'm getting really annoyed. I lose every single lotto. Can't get the stupid thing into my cart. But anyway, hopefully that changes soon. In the meantime, that shortage in chips is definitely going to help semiconductor stocks out. So Western Digital is one to keep on your watch list. Another very hated stock that we're looking at is Deutsche Bank, DB. It actually just closed above its 50-month moving average. And it's the first close in over 8 years. This definitely is the most hated financial company in the world. But according to our team at MacroOps, we think it's going to surprise a lot of people in the years ahead. So we're actually long this stock in the MacroOps portfolio. This, if anything, is a contrarian play, of course, but those can be the most lucrative. Twitter, which we pitched back in August in one of these videos, and then of course to our MacroOps clients, it was trading at below $40 a share. Since then, the stock has doubled. You can see it's close to 80 now. And you can see it's successfully completed a massive 7+ year head and shoulder bottom. But this huge candle that we're seeing is pretty much frenzied buying. So it's probably a solid local top right here. But we're still bullish on Twitter long term. So basically you might get a pullback here where you could buy in at. And then the next stock that we're looking at is Fubo TV, which is forming a wedge on the monthly, weekly, and daily basis. It is in breakout mode on the monthly chart. The company has a hot product, it's growing revenues at a fast clip, and it has a high short interest. They report earnings this week, so definitely keep an eye on them. They could really pop from here. And if you don't know, they are the streaming TV service, mostly focused on sports. Now, because March just started, in our Fallible system, we are making a fresh rotation. And you know how the Fallible system works, right? We have our algorithm that scans the market and ranks all the stocks based off their momentum. With this TSI scanner right here, we get a nice little number. So basically every month we're rotating into the top 5 names because those top 5 names have the highest momentum. So that way we have the highest odds of keeping our money in the stocks that are moving highest the fastest. Now I will tell you, I was a little bit worried about this rotation. Because of this action in the stock market, you don't really know if it's going to stop here or keep going. And if we have a rotation coming, I mean, what's going to happen if it kept dropping? We'd likely be stopped out. So of course, thoughts like that run through your mind, whether you're using a Fallible system or really any trading strategy. But at the end of the day, because you don't know what's going to happen in the market and all you know is that your system system has a robust edge and that it has good risk control, well, you just shut off your brain and you execute. And when I say shut off your brain, I don't mean turn stupid. I just mean shut off the emotions. And if the market drops after the rotation, then so be it. That's part of the game. You're gonna take losses. The legendary Peter Brandt had a good quote about it. He said, a trader's job is to take losses. A losing trade doesn't imply you did anything wrong. The hard part about trading is that you can do the right thing and still lose money. There's not a direct feedback loop that tells you good job. I only have control over the orders I place. I don't have control over the outcome of trades. And that really applies to something like the fallible rotation right now. See, the wrong thing to do was to let my emotions take over and not make the rotation, to not make the trades, right? That would be stupid because I'm breaking the system. The right thing to do is to take the trade. And if the trades lose, that doesn't mean that it was a bad trade. It was a good trade because the system has an edge, right? But a good trade can still be a loser and a bad trade can be a winner. That's why a lot of people get into bad trading habits, because they do the wrong thing and they see some success from it, but over the long run, they get screwed. So that's why when it comes to systems trading, like I said, once you have a robust system that wins, that has an edge, and you have your risk management in place, then what it comes down to is your execution. Can you control your emotions and do what needs to be done? And when you're able to do that, that's when you get crazy returns like this. Look at the equity curve on our system versus the general market. That's execution of a good system. That's what that is right there. Now, with the market rebounding like it is, I would say the most likely outcome is that those positions are just fine. We're probably getting in at great prices right now. And even if the market has sideways chop like we were talking about for the next few weeks, because in our system we're investing in the highest momentum stocks, ours will likely make some good money. But again, you never know. The only thing you do know is that your system has that edge and that you need to follow it. And of course, if you want to learn more about the system that I, myself, and all our Fallible members use, then check out this free training. You'll learn step by step exactly how we do it so you can do it too. I'm going to put a link to this training in this video and down below in the description and comments. And we just got a new rotation, so it's a great time to start. You're going to love having a system in place, especially as we go through these way more volatile markets. So definitely click this link right here to go to that training where you could learn to use the strategy. As I said, absolutely worth getting the system into place. So click this link and I will see you there.